Well, I trust that you all had a good meal and you're enjoying your conference. I was told we've got about 35 minutes. So I've decided that perhaps if you do have a question, fire away. Ask it right away, and then you put up your hand and you speak loud. I'll repeat it. They'll get a mic. All right. But let's keep that brief. I've got quite a lot of work to cover. So the topic that I'm going to discuss is the tax pitfalls of structuring company-owned life policies. Now, I've decided to choose this topic because from being in practice, I see that things go horrendously wrong. And because this is an area that people don't specialize in. So I thought, let me talk about the life policy, especially in relating to company-owned policies, and give you a brief overview of some income tax, estate duty, and also some pitfalls, and analyzing some of the reference guides out there that is available on the SARS website. So the agenda would be, I started with, say, why do we do this? What's the importance of this? And I think that this is an area that's greatly neglected in South Africa and in worldwide. And that is what I term as business succession planning. But also, one can phrase it as business financial planning. Now, you all know financial planning, but this is the new kid on the block, and this is the one that I believe is neglected. So I want to just put it into context and tell you what is business succession planning and why do we really need it. And then I want to talk about life policies. Now, life policies is an excellent way to create wealth. Now, let me tell you up front, when you talk life policies, people think of it as a grudge payment. When you deal with life policies and business succession planning, it changes character. It actually becomes an investment. Total different focus. And this is what I'd like to analyze. So I'm going to talk about the value of policies in business succession. And then I'm going to touch on the income tax, estate duty considerations, because there's been some changes, quite drastic changes. And then I want to end off and say, what is this all about? And I'll show you that risk profiling, which is the key concept of financial planning and what the financial advisors, intermediary services, actors build around, is so important even from a tax perspective. I always tell the people they don't know it. But FAIS and SARS, they're actually twin brothers. And I'll show you that today. So let's just start off with some stats I've got on the table. I took that randomly and generalized to a large extent. But what it basically says is that the importance for a family business to survive is extremely important, and that has a direct correlation with the gross domestic product of a country. So one can make it very, very simple and say that if you, with bad planning, would destroy an economic unit, you may be destroying very many taxpayers. And that is fundamentally wrong. Perhaps the focus should be not improving tax collection, but creating taxpayers. And this is what I'm talking about. So there are the stats. It is quite clear that the failure to provide for business financial planning has a direct impact on the economic welfare of a country. What about South Africa? Well, there are two that I would like to point out to you. Fact number 3. It says, let me just get this. There is number 3. The majority of businesses do not have adequate succession plans in practice, and that is a fact. I experienced that with the wine farmers in the Western Cape, which I'm dealing with quite a lot. They have some kind of planning, but it is haphazard and is very much flawed. It doesn't make a total, the picture doesn't make sense. They will have a trust here, and then a family members in a will, and none of them are speaking to one another. And that is the problem.